Hello everybody, in this video I'm going to be talking about and going over Marathon Oil, and before I get into it I just wanted to let you know that this is not going to be a deep dive into their financials, but more so me giving my opinion on the industry and taking a brief look at the stock. So without further ado, let me get right into it. Right off the bat, I can see their 5-year chart is not a very pretty picture. 5 years ago, almost exactly, their stock was at $23.57, and then most recently, it was at just over $3 at $3.02, which is never good for any company. And taking a look at their revenue and earnings, the picture does not get any better. Their earnings have really decreased quarter over quarter for the last 4 quarters, along with their revenue. And then if we also take a look at the last 4 years, 2017 looks like a just absolutely terrible year. They had to make a lot of capital investments, so their earnings are even less, they're more negative than they were positive for their entire revenue for the year. And then switching over to Robinhood here, I wanted to point out their market cap and dividend. And the dividend yield here actually is not true. Unless they've recently reinstated the dividend, I believe the dividend yield is actually supposed to be 0 right now. So even though the other oil companies are struggling, they have kept their dividend and the yield is 10+% right now. But Marathon is not able to reinstate their dividend and it's at 0%. And then the other thing is the market cap. They just have a $4.35 billion market cap, compared to Chevron, BP, and Exxon, which all are somewhat close to $100 billion. So Marathon, much smaller of a market cap right now, and that's partially because of the dividend going away, in my opinion, compared to some of the really high dividends with the other stocks. And I wanted to talk about a few points by the bears and the bulls by analysts at Morningstar. The first point we have here for the bulls, or the first positive point, is that Marathon was one of the first U.S. shale companies to establish a track record for positive cash flow generation. And just really in the last few years, it initially started in 2010, but I guess free cash flow just started probably since 2016. Marathon is much more focused on shale drilling here in the United States compared to offshore drilling, like Exxon and BP do. So what they do is they release all of these chemicals and whatnot into the ground, and that frees up the oil in the shale so that it can be extracted. And Marathon Oil is much more focused on that compared to offshore drilling. And that kind of leads into the second point, which is that Marathon's acreage and Cotton Eagle forward plays overlaps the juiciest sweet spots and enables the firm to deliver initial production rates for far above the respective averages. And that was a little bit weird way of saying that they're really leading the way for shale production here in the United States, in Montana and North Dakota and Texas compared to their peers. And I'll probably touch a little bit more on that here in just a minute, but I wanted to also touch on a few of the negative points by an analyst at Morningstar. And they're all, the first two at least, are kind of talking about the same thing. Marathon's basin acreage is relatively fragmented, talking about their shale production. And then the second one, not all of Marathon's acreage is ideally located, with it being some of it in Texas, some of it Montana and North Dakota, so it's a little bit split up. And well productivity could decline when the firm runs out of drilling opportunities in sweet spots where there's tons of shale that is really easily extracted and relatively cheaply. So once that starts to dry up, Marathon could be in a lot of trouble. And then just this last point at the bottom here, Marathon is unable to earn its cost of capital, meaning they can't make the revenues in what they've already spent in their investments due to prior investments in higher cost resources. And I think we saw that in 2017, where their earnings were more negative than their revenue was for the entire year. And then lastly, I wanted to talk about their research report overview here on Robinhood, and it's quite surprising, honestly, if you ask me. So far, from what I've looked at, Marathon looks like it's in a bit of trouble, but the Morningstar rating is 5 stars, and there's no economic moat, and uncertainty is very high, and that's from the same research report, so pretty surprising to me. So really what it comes down to is their fair value. They stand firm with their $11 fair value, and the stock is currently trading at about $5, less than half of the fair value. So that's really where that 5 stars comes from. And I also just took a look at BP, or British Petroleum, and it was a very similar situation. I've also made videos in Chevron, Exxon, and BP, so be sure to come and check those out if you are interested in those. And I think this is going to conclude my oil stocks for now. Be sure to comment if you have any questions. Thank you so much for watching, and subscribe for more content.